High yield savings accounts are one of the best places to save cash for your emergency fund, as well as other short-term financial goals. But there's a lot of different banks to choose from.
Yeah, so today we're going to be breaking down the best banks and brokerage accounts that you can use as a high yield savings vehicle and what to look out for, plus a very interesting tool that we came across that might be of interest.
Yeah, and this is important. People are losing billions of dollars with their money sitting in a checking account. I use Chase. My Chase checking account is paying 0.01%. So I'm earning no money there. So I want to move excess money to something that's a high yield savings account that pays a little bit more.
Yeah. So let's start out with the bank. So we organize this between bank accounts and brokerage accounts. And so bank accounts, my favorite is Ally. That's what I use for my own personal online savings account. They're yielding about 3.3%.
Okay. Yep.
Very easy to open it. The customer service level has been pretty good so far. But my personal favorite feature of this is the bucket strategy. So if you have multiple different goals, let's say you have an emergency fund, money that you're setting aside for down payment on a house, vacation fund, you don't have to open up 2 or 3 different online savings accounts. You just open up the one account, but then have separate buckets within that account. So,
and you can put a dollar goal, right? And it will track your progress to that goal.
Exactly.
Right. Okay.
Yeah.
That's great.
It's very simple. I'm a minimalist at heart. And so it plays directly to my strengths. And so I'm a very big fan of Ally.
That's perfect. I use Amex. That's also in this 3.3% range. And then you've got Capital One, Marcus by Goldman Sachs, Discover. Those are all that 3.3% bucket right now. And then from there, we start moving up in terms of yield that you're getting from some of these places.
Yeah. So Lending Club is offering 3.6% with a $100 deposit. In the 3.75% category, we have 2 names that you should recognize. Synchrony is a big one out there, and SoFi Stadium in LA.
Yep. SoFi's got 3.75. They also have vaults is what they call it. It's that competitor to buckets, you could say, where you can automate savings to certain goals and it will track your progress towards their goals. So you could have one account, but that account could be earmarked for multiple goals, which is nice. I like that.
Exactly. All right. Then we get above 4%. So PNC is at 4%. CIT Bank is at 4.05% with a $100 minimum.
Yep.
UFB Direct, who I'm not too familiar with. They're offering 4.11% with no minimum. And My Savings Direct at the top of the leaderboard with 4.35%.
That's amazing. 4.35 is really high. Now, their website looks very old.
Yeah.
And it's always a little concerning.
Created that website.
It's always a little concerning when you see a website that looks that old in terms of what are they doing for customer service? Are they staying modern? But that's an impressive rate. It's worth looking at. They do have
maybe how they can offer those high rates.
It very well might be. That's a lot of these institutions already don't have physical locations. So that's how they end up passing on some savings to the end customer. But it's something to look at. I'd be curious if anybody's used My Savings Direct, but that's a huge rate to get, 4.35.
Yeah.
And then we move into some brokerages. So if you do happen to have a brokerage account at one of these places, they have great cash yields as well. So you've got Betterment at 3.75. You've got Wealthfront at 3.8. Wealthfront and Betterment both also have a bucket strategy where you can automate some of your high yield savings account to go to certain locations.
Correct.
And then Robinhood, they have a 1.5% for the typical customer, but then they have a 4% if you're a gold member. And that's just a $5 a month charge. And then you get that 4%. What's interesting about these, though, that they do that's unique is they use partner banks. So you can get more FDIC coverage from just going through Robinhood. So you can get multiple banks through that one and get a higher level of FDIC if you happen to keep a lot of cash on hand. So something to look at.
Yeah. So you do want to keep in mind that you want to do your due diligence. You want to ask some questions before just opening up an account at some random bank or brokerage account. So the big ones are make sure it's at least FDIC or NCUA insured up to $250,000, just in case something were to happen to those institutions.
Yeah, you should see it right there on the website. It should be pretty clear that it's there. You want to make sure there's no ongoing minimum deposits or an initial deposit. There's no maintenance fees. Sometimes some institutions have. If you have a paper statement, they charge you $5 a month, or they require $100 a month to get started. So just take a look out for that to make sure you know what account you're getting into.
Yeah, and also make sure that there's no other catches, like you need a direct deposit setup in order to get that rate, unless you're really willing to move over to that institution.
Yeah, that's SoFi. SoFi is that same thing. They've got their little catch with, hey, if you want this 3.75, you set up a direct deposit. There's no minimum direct deposit, but it's there. So something to be aware of. Then another thing is just how can you get money, right? Is it ATMs, a debit card? Is it online or wire transfers? And keep in mind, most of these banks still follow the rule where you can only have 6 withdrawals in a month.
Yep.
This is an old law from the Fed where it's called Regulation D, and it was changed in April 2020. So the Fed no longer imposes this mandate where you can only have 6 transactions a month, but most banks still follow this regulation.
Yeah.
That's so something to be aware of. How often can you get your money out of there?
Yep. And so also keep in mind, what does the customer service level look like?
It's a big one.
If you do have any questions, how do you contact them? What is their service policy? Is it a chat? Is it a telephone number? Is it an email? And also ask the question, how is my money actually compounded? Is it compounded daily? Is it weekly, monthly, annually? Obviously, the more compounding, the higher the frequency, the better the return that you get. And then we want to go over the last one, right?
Yeah. So we've got an interesting tool we've seen. We've not used it, so we can't give a personal endorsement of it, but it's called Max My Interest. It founded in 2013. I've known about it for a couple of years now. And so it's really a cash management optimization tool. So what it's going to do is you can open one account at Max My Interest, and you'll need to link other bank accounts, right, and institutions. Yeah. But it's going to look every day at the yield these accounts have. And on a monthly basis, it will send you a report basically that gives a suggestion of, do you want us to move your money to these institutions to get a higher yield? So it's really interesting. It's going to basically screen every bank, every high yield account, and move your money for you with your authority on a potentially monthly basis to both get the highest yield from any bank as these bank rates change, and as well make sure that if you do have a lot of cash, you stay below these FDIC limits. So if you do go over 250 with one bank, it'll suggest, hey, why don't you move the excess to this bank and then to this bank? So it's really interesting.
And what's nice about this is they will keep all of your accounts in one portal. So you can log into that portal and see where your money is with all these different banks. And more importantly, at the end of the tax year season, they will send you one PDF with all of your 1099s in one. So you're not going to be getting 5, 6, 7 different.
That would be brutal.
1099s.
That would be brutal.
End of the year trying to account for all of that. So right now they say that they're yielding about 4.11% APY, which is pretty competitive.
It's very competitive.
Very minimal
That's up to the very high end we've seen.
Oh yeah. I mean, it's just right below My Savings Direct, which is 4.35%.
Yeah, it's great. And they charge 0.04% a quarter. So 0.16% per year. So even if you take that away from the 4.11, you're still at the high end of the competitive rate here. So it's pretty interesting, something to look at. Again, if any of you have used it, let us know what you think. I'm certainly going to start looking into trying it out and see if we can do a future video on how this works.
Yeah, that sounds great. So if you have any comments, or if you know of any other institutions that are competitive, let us know. Otherwise, we'll see you next time.
See you.